Hi, I'm Byron Udell, founder of AccuQuote. Since 1986, we've helped millions of people save money on their life insurance. Historically, the life insurance industry isn't exactly a hotbed of innovation. In fact, during my entire career, I've seen maybe 5 truly new things. Today, I'm going to talk about one of them. Not only is it new, but it's something I liked so much that I bought 2 of them, one for me and one for my wife. Once you hear how it works, you might wonder why, as I did, that it took so long for the industry to come up with it. You may or may not be aware of the odds of death. Last I checked, it was 1 out of 1. So, unlike any other kind of insurance, life insurance, assuming you're smart enough to die with your policy in force, is a guaranteed win because we all die, and when we do, the claim is paid. On the other hand, the odds of certain other types of losses we buy insurance for example, the odds of your house burning down, is 1 in 1,200. The odds of needing long-term care when we get older before we die, 70%. The odds of either you or your spouse needing this type of care, either in your home or in a nursing home, 91%. And sure, you can buy insurance to cover that, but here's the truth about long-term care insurance. First, it can be very costly. Depending on your age, it can cost thousands of dollars a year. Second, rates for long-term care insurance are never guaranteed, which means the insurance company can raise your rates in the future. Over the past 25 years, even the best long-term care insurance companies have raised rates multiple times. Can you imagine buying a policy at, say, age 56 and then at age 65, you get a notice telling you that your rates are going up by 40%? Then again at age 72, again at age 80, right before you figure you might actually need the coverage? How would you feel? 3, in order to make a claim, you not only need to prove that you qualify medically, but also that you actually spend the money on licensed care, either in your home or an approved facility. You can't simply have a friend or family member take care of you, which is what many people want. 4, typically, long-term care policies have a 90-day waiting period before benefits begin. So even if you need the care, if it doesn't last more than 90 days, you won't get any benefits from your policy. And lastly, if it turns out that you're one of the people who dies suddenly one day, never having needed care or having accessed any benefits from your policy, the tens of thousands of dollars of premiums you've paid over the years will end up being totally wasted. You can probably see why people aren't lined up to buy traditional long-term care insurance. Not to mention that just the thought of needing long-term care is something that none of us likes to think about. So what's the solution? 7 of 10 of us are going to need this stuff. The cost of care is incredibly high, and it's going up every year. If you need it for any length of time, as some of us will, it can wipe out a lifetime of savings and decimate any legacy you hope to leave behind. Well, recently, some life insurance companies have actually developed a solution that I think is one of the most creative I've seen in 30 years. Here's how it works. You buy a life insurance policy with a specified death benefit. For example, let's say $500,000. The $500,000 is more than a death benefit, though. It is essentially a pot of money that you can access if you need it for long-term care. If you never end up needing long-term care, no problem. The $500,000 goes to your family when you die. There's no 90-day waiting period to qualify to get at the money when you need the care. The premiums are guaranteed never to go up. And when you qualify for benefits, you can spend the money on anything you want. No receipts, no requirement that the care be rendered by anyone in particular, which means that you can pay a friend or family member if you like, or you can use the money and throw a party if you want. And when you're on claim, which requires that your condition be likely to be permanent, your premiums are waived, which means in most cases you won't have any further premiums due for the rest of your life. It's all done through a simple new rider to a life insurance policy called a benefit access rider. And it doesn't typically add much to the cost of the life insurance, which is already priced at the lowest levels in history. You might ask, how can they provide so much for so little? The answer is actually quite simple. Once you qualify for long-term care by either having a severe cognitive impairment or by needing help with 2 or more of the 6 activities of daily living, the ADLs, which are eating, dressing, toileting, bathing, continence, or transferring. On average, you only have 3.5 years to live once you have these conditions. If the insurance company knows they're going to have to pay you the $500,000 3.5 years from now, giving you access to some of the money a little bit early actually doesn't cost them that much money. And you can access up to 2% of the death benefit each month until it's all gone. So it doesn't really cost them that much, and it doesn't add that much to the premiums. As I mentioned earlier, I bought 2 of these policies, one for me and one for my wife, $1 million each. I like knowing that my premiums are guaranteed never to go up. I like knowing that I have a pot of money that I can use for care without a waiting period if I ever need the care. I also like knowing that if I don't end up needing the care, my kids are going to get the $1 million and my premiums will not have been wasted. If you'd like to learn more or would like to see an illustration of how this product could actually work for you, let us know. You can reach out to us at the number on your screen. Thanks for listening.